Let us quickly discuss on a new and small topic, which is something called as what advanced tax. Which is something called as what advanced tax. In this topic, we need to discuss applicability of advanced tax. To whom advanced tax is applicable? What are the due dates for making payment of advance tax? What is the amount of advance tax which you are supposed to pay? Okay, so these are the following things which you need to understand. It's very small topic here. Now, for this, I need to start with Section 207 of Income Tax Act 1961. So, what is Section 207? Section 207 says that liability. Section 207 is speaking about liability for payment of advance tax. Liability for payment of advance tax. Who is liable? What are the conditions which you need to satisfy so that you are supposed to pay the advance tax? That's what is something called as the Section 207. Okay, advance tax. So before getting into this provision, this chapter, let us first try to know the meaning of advance tax. What is the meaning of advance? Fundamental principle of Income Tax Act says what? Income earned, whatever income you earn in your previous year, 1920, you are supposed to pay tax in the assessment year 2021. That's what is the general thing. But advance. What is the meaning of advance? Instead of paying the tax in the assessment year, you are supposed to pay the tax in the previous year. So you are not going to wait till the assessment year 2021. You are going to pay the advance tax in advance in the previous year itself. So you are going to pay the tax in the previous year itself. That is something called as for advance tax. Advance tax shall be payable during any financial year in respect of what? Let us see. What we have discussed, advance tax has to be paid in the previous year only. Instead of paying the tax in the assessment year, you are supposed to pay the tax in the previous year. Now, what is the section says here? Section says advance tax shall be payable. Advance tax shall be payable when? During financial year, not in the assessment year. You are supposed to pay during the financial year. In respect of what? In respect of income of current financial year. If your current financial year is 1920, you are supposed to pay tax on the current income of the financial year in 1920 only. That's what is one thing. How we can pay? Say, if I wait till 31st March, I know my total profit. On that profit, I'll be paying the tax in the assessment year. Then I will have a accuracy. Without closing my books, without completion of the year, how do I determine my current year income? So that is the reason advance tax will be always revolving around something called as our estimated income. There is something called as estimated income. Advance tax is to be paid every quarter. Quarter 1, quarter 2, quarter 3, quarter 4. Quarter 1, I will estimate what will be the income for the entire year. I will estimate. Based upon that, I will calculate the tax and I will pay the tax. Next quarter, half year is done. I'll be getting some clarity. See, initially I thought I'll be getting 10 lakhs. Total income for the year will be 10 lakhs. 6 months passed. Already I got 8 lakhs. Means what? I will be getting more than 10 lakhs. Then what I will do? In the quarter 2, I will revise my estimate and I will estimate my total income has to be what? Maybe 12 lakhs or 13 lakhs. Then quarter 3, I'll be having much more clarity because 9 months has been passed. Based upon this, either I will increase the estimated income or I will decrease the estimated income. Last quarter, 31st March, I am having a complete clarity. I am closing my books on 31st March. I know what is my total income. I know Already, what is the amount of tax I had paid? The differential, what I will do? I will pay that as an advance tax. So here, the concept of estimated income plays a very, very, very vital role when you are trying to calculate the advance tax. So here, let me come back. Advance tax shall be payable during the financial year in respect of the income, current year income of the financial year, which would be chargeable. See, income is what? Current financial year. When it is chargeable tax, which would be taxable, which would be chargeable to tax which would be chargeable to tax when in the assessment year, So generally, if I don't pay the advance tax, the income would be chargeable to tax in the assessment year, but we are not going to wait for that. We are going to consider, we are going to tax that in the current financial area only. So that's what is something called as our advance tax concept. Now, we got a clarity regarding what is advance tax. Now, what we need to understand, to whom advance tax is applicable. To whom advance tax is applicable, that's what is one most important point which we are supposed to consider. Right. Now, applicability of your advance tax. Let us try to understand. 1 second. Applicability. So as we are discussing the applicability, this section is applicable to whom? Advance tax, the point says here, advance tax, okay, provision shall not be applicable to whom? Advance tax provision shall not be applicable to a senior citizen. So if the SSC is a senior citizen, then ultimately the concept of advance tax will not be applicable to the senior citizen. But if such senior citizen, having business or profession, then advance tax is payable. Okay. Generally, fundamentally, any person who is having age of 60 years or above, he need not pay any sort of advance tax. But if the same senior citizen is having something called as business or profession, income from business or profession, then ultimately advance tax is payable if the other condition is also satisfied. What is the other condition? Let us see. Okay. So for this, we need to refer something called as section 208. Till now we have been covering section 207. Now to decide who need to pay the advance tax, we need to refer something called as section 208. What this is? Advance tax shall be payable during a financial year where the amount of tax payable by the SSC exceeds 10,000 rupees or more. So when advance tax is payable, if tax payable when not in the assessment year, during the financial year, tax payable during the financial year exceeds rupees 10,000 or more. If tax payable during the financial year exceeds 10,000 rupees or more, then advance tax is to be paid. But if the same SSC having a tax payable of 10,000 rupees or more is a senior citizen and does not have any sort of business or profession, then no need to pay any sort of advance tax. But if the same senior citizen having a tax liability of 10,000 or more, doing a business or profession, advance tax is to be paid on a compulsory basis. If you don't pay the advance tax, there is something called as interest under section 234B, interest under section 234C. That we discuss at a later. Interest portion we'll try to discuss at a later stage. 4 sections are there regarding interest: 234A, 234B, 234C, 234D. B and C focus on interest in lesser payment of advance tax or non-payment of the advance tax. So these two sections we'll discuss at a later stage, not now. Now, let us come back. So as I mentioned earlier, advance tax is purely based upon the estimation of income. Now, let us see how do we compute the advance tax. Computation of something called as advance tax. Computation of advance tax. For this, we need to refer section 209 subsection 1A. Yeah, 209 subsection 1A tells you the method of computation of your advance tax. So how do you compute your advance tax? So as I had mentioned earlier, advance tax shall be always computed in terms of your estimated total income. You do an estimate for the entire year, what would be the income you are earning. That you do an estimate. That is the amount of tax which you need to pay. So estimate the total income of the year. Total income of the year. This estimation should also include what? Any sort of casual income. You might be winning some lotteries, you may be winning from uh, crossword puzzles, you may be having any sort of casual income, and you may be also having some capital gains. So this estimated total income should be inclusive of your casual income. This estimated total income will be inclusive of your capital gain. Means what? Say you are doing a business or profession. When you are doing a business or profession, your business income, what you will do? You will prepare your estimate. Anyways, you will be having your budgets, right? You will be preparing your budgetary control. So based upon the budget, you can have an estimate of what is your turnover. Based upon the turnover, you are already having an estimate of your net profit. So based on the net profit, you have determined your taxable business income. Now, in that quarter, you had sold some asset. As you had sold some asset, you will be getting some sort of capital gain. So to this taxable business income, you need to also add up any sort of capital gains you are getting. If you had won any sort of lottery or you had done any sort of betting or whatever it is, in that betting or gambling or whatever it is, even that should be included as a part of your business income. That's what is something called as a estimated total income. In respect estimated total income, we need to consider. So that's what is something called as the section 209 subsection 1A. Now let us move on to the other aspect. Here, here, what we'll be doing here, the next thing is nothing but when you are determining your estimated total income, you need to determine tax on estimated income. Tax on something called as the estimated income. Already, payer, some person who is making payment of consideration has deducted some sort of TDS. So now I need not pay that as an advance tax. So what I need to do? I need to reduce any sort of TDS which is happening. That sort of tax deducted at source has to be reduced. The differential amount, whatever it is there, that is forming part of your advance tax. Say you got an income, you are rendering some service, your client has paid you professional charges. Your client has paid you professional charges. For your client, it is an expenditure. For you, it is an income. What he will do? Under section 194J, that person will deduct 10% and he will pay the amount. So 1 lakh is the fee which he need to pay. 10% he has deducted, paid you 90,000. So ultimately, 10,000 is something called as TDS. Do I need to pay this again to the government? No, I need not pay. Already, my client has paid to the government on behalf of me. I need not pay. So what I will do? I will calculate my income. From that income, I will compute the tax on that. Already this amount is paid, so I will reduce that. The balance, if any, has to be paid. Okay. So this balance I need to pay as an advance tax within due dates, within the due dates mentioned under section 211. So section 211 gives you some sort of list dates. within that date you are supposed to make payment of advance tax. If you are not making payment of advance tax within the due date, ultimately, as I said, interest under section 234B, interest under section 234C, these two things are going to apply if you are not paying within the due date as specified under section 211. Now, some cases you are not able to determine your estimated income, you are not paying your advance tax. There, what will happen? Advance tax can be also paid under section 210 subsection 3 when based on order passed by assessing officer. Assessing officer had issued an order. Assessing officer had issued a notice asking you to pay something called as your advance tax for a financial year. So then, based upon that, few conditions if satisfied, then assessing officer can invoke this power. So assessing officer has a power to pass an order demanding what? Payment of advance tax. When? If these conditions are satisfied. Upon satisfying of this condition, assessing officer can invoke his power to demand advance tax from you. What are the conditions? Let us see. The first condition, in opinion of in opinion of the assessing officer, advance tax is payable. Last year, you had paid an income tax of 25,000 rupees. Means what? Current year, your tax will be either 25,000 or more than 25,000. If not, something less than 25,000. But it cannot be less than 10,000. So, assessing officer is feeling that as last year you had paid a tax of 25,000, current year also you will be having more than 10,000, but you have not paid the advance tax. Assessing officer is sending you a notice asking that, in my opinion, you need to pay the advance tax. So, for that financial, then you need to justify turnover for the current year at present. So, as of such, I need not, my tax liability is not going to be more than 10,000. So, I have not paid the advance tax. That's what is the justification which you need to give. But assessing officer can always invoke this power and he can raise a demand on you to make the payment of advance tax. Now, such SSC, whoever SSC who has not paid the tax, such SSC has already, what happened? Already been assessed. Such SSC has already been assessed. How? Assessed by regular assessment. By regular assessment in any previous year. So the SSC has been already assessed by regular assessment in any previous year. What is the meaning of regular assessment? That we'll discuss. When we are going to what? So where here we'll be discussing something called as 143 subsection 3 assessment procedures. When we are discussing that, I will explain what is the meaning of regular assessment, scrutiny assessment, summary assessment. So any year, if your assessment has been done under something called as regular assessment, then by default, if you are not paying any sort of advance tax, then what will happen? The assessing officer will issue a notice to you asking you to pay the amount of advance tax if anything is there. Then, okay, this provision will clearly understand when we are going through 143 subsection 3, there we'll discuss that. Then, so that's what is the second case. Third case, installment of whenever you have not paid any installment. So first installment you had paid, second installment you had paid, third installment you have not paid. Then what he will do? Notice is issued in case of failure to pay any installment. So as you had paid the first and second installment, you are supposed to pay the third installment also. If you have not paid the third installment, ultimately assessing officer will issue a notice. When he can issue? Anytime the notice, this invoking of the demand, this order can be passed anytime during the financial year. During the financial year. Assessing officer cannot pass the order after completion of the financial year, but anytime before completion of the financial year, he can invoke this power. He can send a notice on this. Here, one more thing I need to mention here. Here already one point we had mentioned. When you are estimating your income, casual income you are supposed to consider. At the same time, you should also consider capital gain. At the same time, you are supposed to consider your net agriculture income. So you need to consider something called as even your net agriculture income should also be considered. So that's what are the basic important things which you are supposed to consider. Now, what are the due dates under section 211? Due date under section 211. Let us see. Due date under section 211. Okay. Due date under section 211. So, as I said earlier, we'll be having 4 different due dates. Now, due dates, this has been revised. Now, here the section says that advance tax due dates for corporates and non-corporates. So, here advance tax for corporates. What is the meaning of corporates? Company. And advance tax due date for non-corporates means other than company. Okay. So, other than company, but this non-corporates are not covered under section 44 AD. These non-corporates are not covered under 44 ADA. Any sort of people who are a company or who are not a company, not covered under 44 AD and not covered under 44 ADA, the due dates are different. So ultimately, if you are covered under section 44 AD or you are covered under section 44 ADA, the due dates for you are going to be different. Okay. Now, first let us see what are the due dates for these people. The due date every quarter. Say when your quarter will end June. First quarter will end in the month of June. Second quarter will end from what? July, August, September. Second quarter will end in September. Third quarter will end in October, November, December. So third quarter is ending in the month of December. Fourth quarter, when it will end? March. So this is nothing but the quarter ending. So due date of installment is what? On or before 15th June. On or before 15th June, you need to make payment of your advance tax. On or before 15th June, on or before 15th September, on or before 15th December, on or before 15th March. So those are the due dates for a non-corporate who are not covered under 44 AD, who are not covered under 44 ADA, and who is a company. That's it. Now, on this due date, what is the amount of tax you are supposed to pay? Compute the amount of advance tax. See, determine your estimated total income. On the total income, determine your tax on the total estimated income for that year. You will be getting some advance tax. That's what is the total amount of advance tax to be payable for the year. On that, you shall pay 15%. Minimum 15%, not less than 15% of the advance tax. Whatever amount of advance tax you are getting, 100% of that you need not pay. You can pay only to the extent of what? 15%. Only to the extent of 15% you can pay. Then cumulative, that means already 15% I had paid. Say of 100%, 15% already I had paid. Now I need to pay a balance of 85. What I will do? Here a cumulative of 45%. Cumulative of 45% of advance tax means what? Already 15% I had paid. Now 30%. So total put together what? 15 plus 30%, the total put together 45%. So whatever advance tax you are getting, compute 45, you will be getting something minus first installment. Already some advance tax is paid. So, which is nothing but 15%. So here I had to pay 30%. So compute your advance tax. On that, take 45%. From that, if I remove the first installment, the balance I'll be getting, the balance I'll be paying as a part of my second installment. That's what is your second installment. Now, third quarter, third installment. So what it says, 75% of advance tax has to be paid. So again, this is cumulative. Of 100%, you had paid 45. So of the 100%, what we had done? Paid 45%. So we are left with what? We are left with 55%. Okay. So now what you are doing? You are again, so if you observe here, 15% you had paid. Here cumulative is 30%, and here again cumulative is 30%. So what you are doing? 75% of the advance tax which you are getting minus your first installment minus second installment. Whatever balance you are getting, that balance you will pay. Why always we are taking on your advance tax? Because you may be having an estimate. You will be having an estimate. In the first quarter, my estimate may be something else. So my advance tax amount is something else. But September, I got a clarity. Suddenly, I got an order which was not expected before. Then ultimately, my income will increase. Then what I will do? Then I will be then I will be considering the revised total income. On the revised total income, I will be computing the advance tax. On that 45%, I will consider. So ultimately, what is happening? This amount of advance tax and this amount of advance tax may not be the same, because revision income has happened. So ultimately, tax may change. So that's the reason you are having a differential. So this amount is the total. Of this, already I had paid something. So what we are doing? We are reducing that. Now coming to the December, we are in the third quarter ending. So I am having much more clarity, and I am at the opinion that my income will be much more higher. So again, I will revise my income, compute the advance tax. Of that, I will be considering 75%, of which a part has been already paid in the first installment and already paid in the second installment. That I had to reduce. That amount I need to pay. Now, finally, on or before 15th March, balance total 100% has to be paid on or before 15th March. So the due date for the last quarter is on or before 15th March, but the act says even paid on 31st March deems deems to be paid. Okay, it is deemed to be paid on 15th March only. Even you don't pay on 15th March, but you are paying the last installment on 31st March, it does not amount to making a default. So any amount paid on or before 31st day of the March shall also be treated as a advance tax paid for that year. So that's what is the case where advance tax is to be paid by the company, or advance tax is to be paid by a non-corporate SSEs who are not covered under section 44 AD, or who are not covered under section 44 ADA. So that's what is the first part of this project. Second part, if you are covered under 44 AD and 44 ADA, only one due date will be there. You need to pay advance tax on or before 15th March. Or even if you pay the advance tax on 31st March, it is deemed as if advance tax is paid on 15th March only. So even if you pay the advance tax on 31st March, it is always deemed to be paid on the same date only. So that's what is the end of your advance tax topic. And one point I need to consider. One point. Say some cases I may not be able to determine the casual income. I may not be able to determine the capital gains in advance. Say suppose I had purchased a lottery ticket in the month of, say for example, June. June 1st, I had purchased a lottery ticket. The draw of this lottery ticket will be done on 31st June. What is the guarantee that I will get the income? There is no guarantee. If I won, I'll be getting the income from the lottery ticket. Otherwise, I won't be getting the income from the lottery ticket. So in this case, I am not able to pay the advance tax for the quarter one. It's okay. When it is okay, if I pay the advance tax in immediately coming quarter, then there is no issue. I am not able to pay the advance tax on the casual income. I am not able to pay the advance tax on capital gain in that quarter. But if I make a payment of the same in the subsequent quarter, then there is no sort of issue. Then there will not be any sort of interest under 234B or 234C, which will be levied. So that's it. That's what is end of your advance tax. Okay, that's what is the end of your advance tax. So what we'll do going forward, we'll try to understand section 234A, 234B, 234C. Thereby, will be covering the interest part. There will also discuss interest on non-payment of TDS, interest on non-filing of your income tax return. All this sort of interest will discuss in the subsequent class.